Hello, it's Thursday the 27th. I'm FxPlew and this is the market brief. So the Office for Budget Responsibility was due to deliver their economic forecast next week at month end, but due to the political shake-up, this has been pushed. Chancellor Jeremy Hunt will deliver his first full budget statement on November the 17th, and the OBR will deliver their fresh economic forecasts then. Hunt and Sunak may struggle to provide the NHS with the funding needed to reduce the waiting lists, especially if they do decide to revisit austerity to help balance the books. There may be some movement on immigration though. Sunak favours more liberal regulations, and that would certainly help deal with the scarcity of cheap labour, which in turn would help deal with rising wage inflation. In the market, sterling rallied further into a correcting dollar yesterday. We opened around 116.30 against the dollar. We're around 115.40 against the euro, and euro dollar is back over parity, around 100.80 this morning. Today the ECB meeting is expected to deliver 75 basis points as a rate hike, and that could be taken as an opportunity to renew short positions, but much of that will depend on how hawkish Lagarde is in her press conference, so it might be worth tuning into that if you carry euro exposure. Over in the US, the Fed is becoming a bit of a scapegoat for all those critical of official policy. Don't forget, Powell was appointed by dear old Donald Trump. And don't forget, it was an almighty cock-up for him to sit on his hands and call inflation transitory when it first started to rise. Granted, he had no foresight of the war in Ukraine and all the inflationary pressure caused from Russia interfering with energy prices, though. And as a side note here, the US is in a dispute with the Saudis over their plan to cut oil supply next month. The US assert that this would help Russia fund the war in Ukraine by keeping the price of oil artificially high. That's one to keep an eye on and see how things develop, no doubt. But meanwhile, the Fed policy of chasing inflation with all the rate hikes has got to the point where interest rates are past the neutral rate now, and as such the Fed face some tougher calls going forward, as future rate hikes should certainly bite just that little bit harder. The market still expects a rate hike at next week's meeting, but the idea that a December hike might be abandoned, that's now creeping into the dollar index, which has rather run out of steam over the past few days. Yesterday, the dollar index fell to around 109.65, and I think anything less than 75 basis points next week, or if Powell softens his hawkish tone at all, we could see the dollar sell off further. So again, keep an eye on that one. Right, that's it from me. Rather wet and miserable today. Hope your day brightens up. Join me again tomorrow.
If you do not have a clue, then just tweet through and ask FxPlew.